How's it going, everyone? It is Andre Williams, and today we're going to be talking about CCIV that's going to be bringing Lucid Motors public. We've spoken about this stock already on the channel, but it's been a minute, and there's been a lot of changes, which I'm going to be going over in this video. So the first thing that we want to start with, we've already realized inside the market, SPACs have been beaten down real bad. And CCIV has definitely been one of them, considering the current price of where it's at right now. We also know a lot of EV stocks have been hit hard as well. So I definitely do see some opportunities here for Lucid Motors. So what I'm going to be doing in this video, what the agenda is actually going to be. So we're going to be doing a technical analysis because we want to know where those support and resistance levels are, and just in case it decides to pull back even further, where we can see some opportunities. The next thing is we're going to be going over an article that kind of goes into some more in-depth details talking about the current situation for CCIV and where the opportunity lies, especially for the long term. Then of course after that we're going to be taking a look at the institutional ownership and as well as the short interest. I feel this is key to know because we want to know, how are the institutions feeling about this? Are they still bullish on it? Do they still believe in the long-term outlook? And as far as the short interest, we already know a lot of SPACs have been beaten down, so we want to see what is the possibility of seeing a short squeeze with CCIV. So let's get into those video segments, and then I'll be giving you guys my final thoughts afterwards. Let's get into it. So I wanted to share this recent article that came out for CCIV today. So let's get into it. So why Churchill Capital stock is a screaming buy at $20. Long-term investors focusing on the next 3 to 5 years and confident in Lucid's ability to execute are looking at bargain prices. It's been a brutal couple of months for special purpose acquisition companies which have been selling off broadly as investors shun speculative growth stocks with lofty valuations in favor of safer investments. The pullback has hit electric vehicle SPAC particularly hard since the EV revolution remains in the early innings and much of the expected growth is in the distant future. It didn't help that President Biden's infrastructure plan that will encourage EV adoption was a bit lacking in concrete details, creating more uncertainty and testing the patience of investors. The turmoil has created buying opportunities for long-term investors, particularly for the relatively more mature EV startups that have the greatest potential. Here's why CCIV, which is merging with Lucid Motors, is a screaming buy at $20. Closer to the pipe. For the first time since confirming the merger in February, Churchill Capital shares dipped below $20 on Friday. Recall that the PIPE, the private investment in public equity investors, committed to buying in at $15, an unprecedented arrangement due to extenuating circumstances surrounding the deal following a month of rampant speculation. At $20, this is the closest that the public investors have gotten so far to being able to invest alongside institutional heavyweights like BlackRock and Fidelity, among others. As a part of the deal, those PIPE investors also agreed to lock up provisions that prevent them from selling shares until either September the 1st. With the de-SPAC transaction expected to close during the second quarter, shares will trade as Lucid Motors for a few months before the lockup expiration. As we enter the second half of 2021, investors will be closely watching the start of air deliveries. It's also worth remembering that the SPAC sponsor has committed to an even longer lockup period of 18 months. Churchill Capital and its operating team, which notably includes former Ford CEO Alan Mulally, are committed as long-term investors that want to add as much value as possible by offering advice from its stable of industry veterans. In fact, Lucid's decision to delay air deliveries from the spring to the second half was made based on feedback from Mulally. And legendary auto exec's input will also be invaluable as Lucid ramps up manufacturing operations, being greedy when others are fearful. Generally speaking, companies within the same sector tend to trade in correlation with each other for better or for worse. It's true that many EV SPAC stocks are incredibly speculative and that some will inevitably fail. To be clear, there have been numerous controversies among EV SPACs, such as Nikola's scandal around fraud allegations or Canoo's pivot to an entirely different business model. Those episodes have justifiably shaken investor confidence in the space, but long-term investors can benefit from company-specific fears that are contributing to a sector-wide sell-off but don't apply to other companies. Unlike Nikola, Lucid's vehicle can propel itself without the assistance of gravity. Unlike Canoe, Lucid has a clear vision and go-to-market strategy and is imminently about to start executing on said strategy. The decline has also brought the stock's valuation back down meaningfully. There will be an estimated 1.6 billion shares outstanding after the deal closes, translating into an implied market cap of $32 billion at $20 per share. That means that Churchill Capital shares are trading at approximately 14.5 times 2022 estimated revenue of $2.2 billion, almost exactly Tesla's forward sales multiple right now. Investing in CCIV and Lucid Motors for the long term should be about the EV maker's execution over the next 3 to 5 years, not about near-term volatility over the next several months. Investors that have confidence in Lucid's ability to ramp manufacturing and deliveries with revenue forecasts to reach $10 billion in 2024 and $23 billion in 2026 should be scooping up shares right now. So we're going to be doing a technical analysis for CCIV that's going to be bringing Lucid Motors public. So we're going to see how it actually finished on Friday. So it ended up closing the day at $19.52, being down 2.98% on the day. As far as what were the fluctuations on the day on the low, it was $19.25, and on the high, it was at $20.50. So we know as of late, SPACs have been getting beat up, as well as many stocks that are in the EV sector. So right away that we can see we're definitely on an area of support here, right around this $20. Let's just call it that $20 range. So what I'm going to be doing is having a wait and see approach. I want to see if CCIV could actually pull back over here around that $17 to $18 range, and I will consider building out more of a position. Part of the reasons being because I do see the long-term outlook for this stock if things go well. But it won't be large because, again, this is a long-term speculative kind of play. The one thing that we need to look out for is CCIV ends up recovering and getting back above the 21-day EMA, the white line that you can see over here. Then things can get interesting as far as the upside, right? It can come back to reclaiming the 100 here at 24. So just something to be aware of, but for what I'm seeing right now, it definitely is on a downward trend and it could continue. You could also take a look down here at the RSI. It's literally around 21. So we know when it's below 30, you're getting the stock at a hell of a deal. The fact is that 21 is definitely something to keep an eye on, but I still do believe there's more downside to CCIV, so that's part of the reasons why I'm not buying it as of yet. So that's what we're looking for in regards to the upside if it tends to start trending upwards, and we already know what the possibilities on the pullback if it ends up actually going downwards, right? So keep an eye on that $17 level, that $18 level, and potentially if you end up seeing 16, I definitely see some opportunities here. Like I said, this is a long-term play, looking at it 5 to 10 years from now, because if you're going to be in Lucid Motors, you're pretty much betting on the EV industry and them being successful, and I definitely do see that. So we're now on fintel.io, and we're going to be checking out the institutional ownership as well as the short interest for CCIV. So in total, in regards to institutional owners, we have 175, and as we scroll down on the page, green rows indicate new positions, while red rows indicate closed positions. And as we scroll down, we could definitely see institutions are very bullish on CCIV. This is taking a look at the latest date of April the 16th, which was Friday, right? And look at this. On even from April 12th all the way to the 16th, we had these many institutions that have been showing interest. If we take a look from April 6th to April 12th, again, more institutions showing even more interest. And now, if we take a look at March, look at this. So far from what we have seen, we haven't seen many institutions actually closing positions. So we can see here on February the 16th, we had 2 institutions that closed their positions. But again, a lot of institutions have been buying in and making adjustments as well. So this is one of the things to be aware of as I keep scrolling down this page. So what we're seeing right away is that many institutions are bullish on CCIV and definitely see some long-term opportunities. So let's take a look at the short interest. So the short volume ratio is right around 20. And this is, you know what, fairly significant. Usually when it's over 21%, we say, well, you know what, there is a lot of short squeeze potential here. And the fact it's at 20%, it's really not that far off. So that just means on the most recent trading day, which was on Friday, out of the 17 million shares that were traded, 3.4 million of those shares actually were shares that were being shorted. So definitely a good thing to know and to be aware of. As far as the short shares availability, it stands at only around 200,000. And if we take a look at the short borrow free rate, this is fairly significant at 12.94%. So definitely some short squeeze potential here in this stock. If we take a look at the previous history on the short volume ratio, it ended up seeing highs of 25.25 back on April the 14th. So definitely something to be aware of, and also seeing the second high here on April the 13th and then on April the 9th over here, and as well as April the 6th. So just taking this into consideration, there's definitely some upside here in CCIV, and I can definitely look forward to seeing some more price action. And like I said previously, this is why this is a great stock to keep on your watch list and actually consider it if you see the potential in it long term. So for my final thoughts for CCIV, I definitely do see a lot of potential here. And the reason being is the price is fairly low considering the fact that the PIPE investment was $15 per share. So these are the main big institutions that got in. They paid $15. And where it's at right now, it's really not too far off from that price. And if you believe in CCIV long-term, Lucid Motors to be exact, then this is definitely a great opportunity. Can it pull back even further? Yes, it can. But please keep in mind, I want you to be prepared and not surprised if you end up seeing that happen. But of course, with that said, I have to let you guys know, I'm not a financial advisor and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. We already know that there is demand for Lucid Motor vehicles. They have over 8,000 reservations, which contributes to almost 700 million in potential revenue. So taking that into consideration, it's definitely looking good for Lucid at the moment. But one of the things I'm going to be looking out for, there's definitely going to be a resurgence back into the EV sector. And I want to see if CCIV can have the opportunity to actually benefit from this. And one of the things we do need to realize as well, if you believe in this company, so it has the KLTs. And what does that mean? You got to know the company, like the company, and trust the company. And the fact that they're going to be producing cars, they have plants in Arizona, we already see the long-term upside here. But it comes down to their execution. If this does not execute well or things do not go according to plan and they don't reach those goals that investors are looking for, then of course there's going to be a lot of downside risk for this stock, and I want to make sure that you guys are aware of that. So in regards to a speculative long-term investment, that's what CCIV is looking like. And looking at the future payoff, it could definitely be worth it. 5 to 10 years from now, we already know the EV sector as a whole is going to be very big. So just taking that into consideration, if you're looking at CCIV Lucid Motors, do you believe, I'm going to ask this again, do you believe that they could be able to flourish in the EV space 5 to 10 years from now? If you do, then definitely look at the current prices where it's at right now, because there is definitely an opportunity there. Hope you guys enjoyed this video, and we'll be talking real soon. Peace.